Hello, everyone. Welcome to another edition of the Smart Office Podcast. I'm your host, Hipolyte Asah. I'm an AI implementation engineer, helping businesses use practical AI systems to improve operations, client experience, and growth. Today, I'm very excited to welcome a special guest, Steven Barge-Siever, founder of Outwork Risk Management. Steven is an industry veteran, attorney, and corporate insurance specialist, helping companies navigate complex risks at the intersection of insurance regulation, technology, litigation, and capital events, and AI. So it's in a comfortable space. Outwork Risk Management bridges insurtech innovation with legacy insurance expertise, helping businesses approach risk with sophistication and confidence. Welcome to the show. How are you feeling today?
I'm doing well. Yeah, East
Great.
Coast, 7 a.m., but I'm happy to be here.
Great, Steven. So for those meeting you for the first time, or who don't know you or what you do, can you introduce yourself and tell us what Outwork Risk Management does?
Absolutely. So my background, I'm a corporate attorney, and like a lot of people, fell into insurance. I started in the complex claims space, working with Fortune 500 companies and really determining how the coverage, which is really the contract, applies to claims. Employment practices liability, director and officer liability is really a contract that you purchase called insurance. And so when I started my career for the first 5 or 10 years, I was heavily involved in claims and contract negotiation. I subsequently became a broker and really focused on perfecting coverage at the front end instead of when claims happen, to make sure when a claim does happen, there's coverage in place that will protect the company. Risk management, to your question more directly, risk management is bigger than buying insurance, right? It's really understanding the company. It's looking at what risks are out there, what we need to indemnify, where the price trade-off comes in with the coverage negotiations, and looking at the company as a whole rather than saying you're a FinTech company, for example, you should buy D&O, employment practices liability, and crime and cyber. And just saying, here's an off-the-shelf policy. Risk management is really more about understanding the company, the risk appetite of the general counsel, CFO, CEO, et cetera, and getting the right coverage in place so it does respond when claims happen.
Sounds good. Gotcha. Now, you describe corporate insurance, I see you describe it on your website as a passion, not your next thing. What does that mean in practice?
Sorry, I missed the question. I apologize.
Yeah, you describe corporate insurance like something like a passion, right? Not your next thing. Yeah. What does that really mean in practice? Like for you, like if
I may be a little cynical about this because I'm an attorney, but I see so many frivolous lawsuits out there where it really is squeezed to get money out of these corporations. And what insurance does is gives a company leverage, right? And so when you have insurance in place, you may have $5 million to defend yourself. If you didn't, every dollar paid to an attorney is coming out of the corporate balance sheet, right? And so the passion, I think a lot of it stems from enabling companies to comfortably and safely grow and take reasonable risks and protect themselves at the same time, while having a cushion or protection in place, which is insurance in this scenario, to protect them when this litigation things like regulatory litigation, $1,000, $1,200, $1,500 an hour for an attorney, especially, non-Fortune 500 firms can't necessarily weather those storms and are sort of forced into settlements and things like that. So part of the passion, again, kind of stems from giving companies their leverage back and enabling them to do what they really want to do and focus on.
Great. Outwork Risk Management seems to sit at the intersection of law, corporate insurance, technology, insurtech. You seem to be doing a lot there. How does your legal background shape the way you advise clients?
Yeah, the legal side is these things they really do all come together, right? And it's hard to fix one of them and ignore the other two. So it's hard to look at the legal aspect, which could be litigation. It could be the literal contract of insurance. That's sort of the legal aspect. There's the broker side, which is placing the coverage, having the connections, having the right insurance markets in place to work with, and having those relationships in place. And then the tech is really about efficiency. And I don't mean efficiency in let's write 5,000 deals. I mean, efficiency for myself, for my firm, transfers directly to efficiency and effectiveness for the client. And so when you bridge those three things, and frankly, I mean, it took a long time to really get to know all three of them intimately. But once you do, you realize you can run a lot leaner. You can run with less people. You can run using technology that helps you with the legal aspect, with the brokering aspect. And you can do it with highly sophisticated individuals at our firm that really understand the nuance of insurance,
Right.
which today is still a little bit too complicated for AI to take over 100%, but it it's giving real expertise through the use of technology, through the understanding of the legal workings of insurance.
Great. Gotcha. Let's talk about something, maybe something you have, maybe something to attract some clients, maybe some client story, like given your experience across corporate insurance. You talk about legal risk, you talk about probably complex coverage strategies. Maybe you have one client story that or professional win or some complex risk situation that stands out to you that you may want the listeners to know about. Some story that stands out, maybe a professional win. Would you mind sharing one of those?
Of course, obviously, I won't share the client's name,
Right,
or maybe what I'll do is I'll take a few scenarios and combine them into one story. The One of the things that I find very interesting, I'm going to use fintech as an example.
right.
The A client or a few clients of mine, they were successful, right? They went through a Series A, Series B fundraise, and they were generating significant revenue is to either be acquired or continue growing. And through that process, regulators found them, right? And
Okay,
what happened was the FTC investigated them.
right.
And I mean, to jump to the conclusion, 4 years later, 3 or 4 years later, there was a $16 million judgment. There was $11 million in legal bills, and they
Mhm.
had roughly $5 million of coverage to pay the bills. Now, that's interesting in and of itself, as far as what the process was and how it sort of felt from my legal
Mhm.
perspective. Again, regulators are one form of litigation,
Right,
one form of claim, maybe to be more precise. But once that was done, what we saw was, there's 50 state regulators. There's
right,
one FTC, there's one CFPB, there's 50 state regulators. So what you started to see were tag along lawsuits. So
right.
they get out of the fire with the regulatory claims, and then what happens is state regulators come in and they want to investigate. And then what
Mhm.
happened is private plaintiff class actions started coming in. And those have been going on for years. And so my point in this is that it's one thing to get a claim, but getting a claim that's somewhat successful really provides attorneys with a roadmap. And so
Right.
that roadmap says, hey, here's how we can sue similar clients. And what we saw
Mm.
after that was now we can go after the 15 largest and try and squeeze a settlement out of them, litigate
Yeah.
it for 5 years, knowing that there is sort of this path
Mhm.
in place. And so what starts as a claim with one client starts to spread into other clients in the space that
Right.
have similar operations. And just to belabor this concept or this scenario, it's not because the firm was intentionally doing anything wrong or these firms are intentionally doing anything wrong. There's a
Right.
lot of pressure from venture capital to grow. And when you're
Right.
growing really rapidly, sometimes you miss nuance. And
Right.
nuance is what regulators and what class action attorneys look for, because they can kind of hold you up. They can really dig into what's going on, and they can, what's the saying? Monday morning quarterback, right? It's easy to
Mhm.
look back and say that
Yeah.
this was wrong and uh, perhaps it should have been done differently. But again, there's no malintent or any reason, any
Right.
purposeful um, bad deeds going on, but these things do get expensive and lead to sort of a trend in the legal world, which leads to a trend in the insurance world, which leads to coverage being cut, regulatory coverage being dropped completely or
Right.
really lowered and things like that. And so I guess the point is you see a snowball effect sometimes with
Right.
these.
Okay. What was at stake for the client in that situation?
I'm sorry, could you say that again?
What was at stake
Well,
in that situation? Yeah.
a merger.
Would that mean they probably closed down shop or something?
In that situation, they did not. They were fortunate. They were doing well enough, and so it was a scenario where it ended in a merger, and uh, they were very successful at the end of the day. But I will say that had they not been in the place where they were, if they were still at, let's say, at Series A,
Yeah.
weathering that would have been extremely difficult, and probably would have led to winding down the company.
I see.
And we do see this happening. I do have other clients that were in the seed and Series A stage that when they get sued, they don't have the financial capacity to sort of
Capacity.
weather these things. And so maybe I'll tie this into one of your first questions about risk management.
Right.
When you look at purchasing insurance, you can look at benchmarking. you can look at what other clients buy, but that's not risk management. That's buying insurance. If you're looking at it, say I'm a Series A tech company, so you take all Series A tech companies. Well, maybe they typically buy $1 million of director and officer liability. But if you're a fintech, you're heavily regulated. So this is one layer sort of deeper. And so you might want more than that. And really what you want to look at though from a risk management strategy is if you get sued, what type of claim might this be? It depends if you're a payments company, a lending company, a real estate tech company. So looking and digging into that really is going to determine how long, how expensive, and litigation is going to be, and understanding how much you could weather without insurance or with different limits of insurance. And then the final thing is sort of putting that next to the price. If it's $10,000 versus 15 to go from 1 million to 3 million of D&O, it may be worth it.
Right. So if I may ask, what do you see that a traditional broker might have missed in this situation? Let's say normal traditional broker, you're dealing with complex situations. What might they have missed?
That's a really good question. I'm going to be nice here. One of the problems, and I've worked at 2 of the 3 largest brokers in the world. They don't have, frankly, they don't really have problems when they're dealing with Fortune 500 companies. They have very good brokers that work on those deals. They're very expensive. There's a lot of attorneys involved on both sides. Fortune 500 companies have teams of risk. They have a risk management department internally and then work. But when you look at large brokers or even mid-sized brokers in the space where you're dealing with sort of middle market businesses, well, you're not getting the same attention. And so just logically, I'm just going to say this very directly and honestly, when you're not making $1 million from a client, or you're not making $100,000 or $25,000 from a client, large brokerages can't afford to put the same caliber of people on those accounts.
I see.
Right. And then secondarily, it's not just the caliber of people, because there are a lot of good brokers out there, but the problem is time. And so it's a constraint. And this is probably where AI comes in to a large extent. If you have, 50, 75, 100 renewals a year, plus you're trying to win new business as a sort of middle market broker, you're really constrained. And so I think what gets lost is the attention to detail in the concept of trying to systematize something. So when you try and make a system out of something, you're rounding corners. And it's good a lot of the time, but there are little things that get missed. And maybe I'll leave it at that, because I'm guessing we're going to get into AI here in a second.
Yeah, we're going to get into AI shortly. In hindsight, what is one of the biggest lessons? Probably, I know you've been working with some of these big corporations, and what, in hindsight, when you look back, what's the biggest lessons you've learned about corporate insurance and risk transfers?
That's a good question. It's a big one.
Yeah.
I would say, I guess maybe I'll go with this. To get it right, there is a human element that's incredibly important still.
Got you.
To make it efficient and effective, technologies, you can't ignore it. You have to have it. Right. But understanding and taking the time to understand the client on both a human and a business level allows you to make the right moves on behalf of your client. And if you can do that, and you also understand the insurance world, you can really add a lot of value. And again, we just said it a minute ago, but time is a major constraint. But if you have the time to sort of understand the client, get it right, and then make it efficient going forward through technology, you've got a service that not everyone can provide, and something that's really great for the clients.
Wow, that's good. I know you've worked in corporate. You have your agency running there. What should a company understand before buying coverage? Like, I know we talked about not just buying insurance, but probably coverage and managing risk. What should a company understand before doing that?
Well, I mean, I've got advice, but they could also pick up the phone and ask someone who's been sued if their insurance worked. Because,
right.
Sometimes the best client is someone who's had a bad experience with insurance. And I mean, understanding where it fails is difficult until you've seen it. But understanding that insurance companies are designed to pay claims, but they're also designed to make money. Right. And so going back to what we talked about earlier and the trends with litigation, underwriters and insurance companies understand that better than anyone. And so when you see exclusions on a policy, just to keep using fintech as an example, when you see a regulatory claim sublimit or exclusion, it's because that's your biggest risk. That's where they're going to pay the biggest and the most severe and maybe even the most frequent claims. And so understanding that insurance, yes, it is designed to protect you and it is designed to pay claims. It's a contract written on four corners, which is actually a legal term. And it's going to, the insurance company is going to interpret what they wrote and what it's intended to cover. And talking to someone who's had a bad experience and then hopefully understanding that it's worth a little bit of time at your next insurance renewal to talk to someone about what the coverage actually is and where it may be lacking for you, you can really fix it up to avoid those problems later down the line.
Okay. I know you talk about risk behaving differently when tested by courts, regulators, and probably counterparties, investors. Why is that distinction so important to know about all these different components in people managing
Yeah.
risk?
Yeah. Well, for two sort of compounding reasons. If you looking at, the investment schedule, looking at all the details of the company and understanding that each one of those impacts your risk in some way.
Right.
And to sort of reverse engineer it, you can look at an insurance application when you're applying for coverage. Every one of those questions is designed to figure out a little piece of what's going on with your company, because behind it are actuaries with a tremendous amount of data and claims.
Right.
And so for you to understand those things, the insurance companies understand them. They're getting information. They have actuarial data science for central part, right, behind it. So you understanding how these things may impact your risk, you're going to want to push back and negotiate with the insurance company to broaden certain exclusions or even unintentional exclusions or restrictive language, because it is the nuance of the policy that often comes into play.
So let's talk about risk, maybe risk architect. So you sound like a true risk architect, like you measuring risk rather than just buying a traditional insurance, which is not what you would normally do. You want companies to measure their risk. Now, what separates a true risk architect from a broker who is mainly comparing quotes? Like you said, it's quote A, this quote A.
I mean, in one word, it's experience, right? And so again, the systematic nature of, not to be too philosophical about this, but like the nature of insurance is to streamline it. And there are things, again, sort of the corner rounding comparison. Brokers, there's a client on one side, there's a broker in the middle, there's insurance companies on the other side. Broker can just send application, get application, push it out to 100 insurance markets. They're all going to say, here's a quote. And then today, there are some tools out there using AI that can compare quotes. I don't know of any that can compare the risk profile of the company to quotes yet, and that's where experience comes in. But also, there's a lot of similarities and a lot of differences in the language. Again, like taking price and just saying, here's the best price, it's $1,000. This one's $1,200. This $4,000. I think, to answer your question more directly, a broker will just go get quotes, present them to you and say, this one's the cheapest, or maybe this has a few bells and whistles. Looking at a company differently is saying, okay, here's where you are today. Where are you in 12 months, right? This is a 12-month policy. What do you have planned? What is the market doing? And it's more about understanding what's going, not just where you are today as a snapshot, but what's going to happen. And then working with the right insurance companies to provide the right coverage at what I would say, instead of best price, I would say highest value. Because if the policy doesn't pay claims or it excludes your major risks, it's a major problem.
It's not helping you at all. I mean, let's talk about, I know we're going to talk, let's talk about AI fintech. I mean, I've spoken to many insurance brokers, but they don't talk about fintech, insurtech, but it seems you're in that world, in that sector right now. I was glad to check you out, and I saw that Outwork Risk Management has published on AI startups, insurance, affirmative AI endorsements, fintech, regulatory risk, and a lot more in that area. You work with technology companies, AI firms, fintechs, and other complex businesses. What makes this risk different from traditional business insurance?
It's new. Like going back to the 100 years of data that we've got on banks, for example, or let's just say, let's throw AIG out there. They've got 100 years of data, right? Well, fintech's new. And so how do you underwrite it perfectly? And insurance is slow to move, especially big insurance. So looking at new risk is complicated, because there isn't an actuarial map on the insurer side to say this is where the risk is going to come from. AI is a perfect example. So
Exactly.
AI came out and there's risk associated with it. There's decision making. You look at an insurance policy before the affirmative AI came out and things like that. And well, if AI makes a decision, you look at the policy, it says a decision, sorry, this is in regards to professional liability or E&O. Let's say you're a tax tech company and you give bad tax advice. Well, two things are happening with tech in that scenario. One is the policy is going to read if a person makes a decision. Most policies read that way. And this is not, if it's not a person making a decision, well, then it's tech, right? And so that's called tech E&O. So a whole new coverage came out with tech E&O. And so then the question was really, how do we specifically cover AI? I'm sorry if
Right.
I'm going down a rabbit hole here, but it's kind of an interesting point
Mhm.
to me, to an insurance guy.
Right.
The what companies started doing was saying we are affirmatively going to cover AI decisions or AI mistakes.
Yeah.
And that's great. But then you ask a corporate attorney and they say, well, right, but when we start listing specific things that the AI is doing, technically you may be excluding anything that wasn't listed. And so there's
Right.
this sort of like push and pull with insurance underwriting and actuaries and brokers and clients. What is the right way to do it? And I
Right.
don't think there's a right answer. I think it's really important to have that discussion with the client more than it is to say one is greater than the other. And then,
Gotcha.
sorry to harp on this because it's kind of cool. You used to look at tax companies. It's a pretty good example.
Mhm.
I would sit down and let's say fill out, I don't know, my tax form. And I could do, if I was a professional, let's say I could do 10 a day. Like I can
Right.
do 10,000 in an hour, right? Or in a minute. And so when you find an error, like the risk is like, it's less, and it could be something as simple as getting the wrong
Information.
address or something like
Right.
that. It's sort of confined to a single client. With AI, like it can get very big very
Big.
quickly. And so that's sort of like so there's the coverage part and then there's the systemic risk that can come with AI, especially once you're
Mhm.
successful. So it's just interesting as these technology, fintech, AI expand how insurance responds to it.
Wow, that's cool. How do you help clients now understand the risks that may not fit neatly into traditional insurance categories? Let's say we're talking now about AI, and most of them, it's not really traditional. It's a little bit nuanced there. It's not in their category that they normally see. So, how would you advise? How do you help them understand the risk?
Yeah. Well, I mean, there's a specific strategy for it. And I started alluding to it, but, looking at AI, there's different coverages, right? There's like director and officer liability. That's going to be kind of the same logic across
Right.
companies. So as a director or officer, you have a duty to act within a fiduciary capacity. And
Right.
so whether it's AI, whether it's a bread manufacturer or you're making cars, your duties as a director and officer are largely similar. When you get into the professional liability, it's a little bit different. And so what you want to do in a rapidly changing world, and I
Yeah.
just alluded to this, but is you want to keep definitions broad. So what or professional liability does is it protects you for your professional liability. If your
Hmm.
firm is making, creating, and distributing artificial intelligence to corporations or companies, then you want to make sure that your business model changes all the time, and I think it has to in this sort of dynamic market environment, the coverage is malleable or broad enough to cover you. And so what I think you want to do a lot of the time is just have really broad definitions of professional liability, for example. And you want your
Right.
clients to understand that we get it, you're an AI company, but you're following a certain path right now, but you're almost certainly going to pivot at some point. Understand that we need to like keep underwriters and insurers informed, and we need to just make sure that we have really broad definitions that make sure that they encapsulate everything you do today and maybe doing over the next 12 months. And then the last point on
Cool.
this, you got to make sure that if when there are exclusions, which there always are on policies, the client knows what they are so that
Right.
they can be an informed buyer.
Sounds cool. Sounds good. I mean, a lot of people are going to listen to this and say, wow, because AI is coming, people are going to start seeing gaps in their insurance and trying to protect themselves. This is important because that's a new field right there. But given the complexity of the work you do, right? Like, that's very complex, like to understand the nuances. Because a lot of people, they don't really understand this. You have to be techy a little bit, and you have to be legal, and you have to be insurance knowledge there. And the clients Outwork Risk Management serve, and the clients that you serve on a day-to-day, what are you focused on improving right now in the business?
Honestly, Service. I think a lot of, yeah, I would say
Do,
service is
do,
probably one
do you
thing.
have anything specific maybe to share, like an area where you are really think you want to zone
Yeah,
in on and improve?
I would say, yeah, sure. I mean, some of the most basic things are some of the most important to clients, and trying to be empathetic to what they're viewing, especially as a non-insurance professional who's building or running a business. Responsiveness is key, right? And going, being sort of an outsourced risk manager and saying, we're going to take care of the insurance, instilling confidence in your client, being responsive and keeping them and under really, and this is not the easiest part, but understanding the individual that you're working with and what they're
Right,
looking for, whether they want to be updated all the time, like sort of the way they prefer to work. And these are sort of soft skills in a way, but there's something that
right,
AI helps with a lot
right.
because you do get busy. We all do as professionals.
Exactly.
And so, yeah, it may not be like, but that's certainly not the only answer, but being client focused, you can have all the knowledge in the world, but if you're sort of in the background
Uh-huh.
and not bringing things along, not making your client feel comfortable, it makes them uncomfortable, right?
Right.
And that's when we start to look for other brokers that can at least just keep them informed and keep them just being responsive, I guess.
Sounds good. Yeah. So, what made you start paying more attention to that area of either service or being responsive, and what does it take to improve on that?
I think, I saw a certain wholesale company 15 years ago, and the way that
Right.
they operated when I was doing claims and retail brokerage, they responded within like 2 minutes and just said, I'm on it. I know this is a really simple example,
Uh-huh.
but I loved how they operated. And I said, I want to operate like that because it makes me feel good. And if it makes
Yeah.
me feel good, I can make a client feel good too
Right.
about the process. And so again, I know these are like really simple things, but I mean, you have to execute behind the scenes also.
Right.
But just seeing another company run in a way that felt like there was urgency and that felt like there was understanding of the product, and then
Right.
again, like delivering kind of on
Uh-huh.
timelines and delivering the product that I needed and pulling the right people in at the right time. Like just seeing another company execute well and how it made me feel is how I wanted my clients feel. And so that was when I started shifting sort of to a doing more behind the scenes to like making sure
So,
the client was informed.
transfer. So, is that more about growth or operational efficiency? You talked about probably follow ups, or what
I
would
think
that
it's
be?
about growth, and I think it's certainly about growth, and I
Okay.
think it's about client retention as well,
Exactly.
because you can do a great job, but if they don't know, and it's not
If they
about
know.
selling a client over and over about you, but it's about, in my mind, it's about, so from the growth perspective, winning new clients, they just like good service. They do.
Right.
And they
Right.
you to take care of it for them. And eventually it grows into a model typically where they just trust you. And trust is probably easily one of the most important things in insurance. And when you gain trust of a client, you have a long-term client for one. They know you're doing a good job. They don't worry about it anymore, and they can focus on what they want to focus on. So it's about growth and client retention, I would say.
Sounds good. So, what would success look like for upward risk management over the next 6 to 12 months? Let's say, given all this, you focus on growing the business, you trying to get things together, probably follow up efficiency growth. How would you measure success in the next 6 to 12 months?
Yeah, that's a great question. I mean, I guess there'd be three things I would say.
Right.
Uh, Clients growing from seed, Series A, Series B to the next stage, right? And so, like, seeing not just the industry, the venture-backed industry being successful, but seeing clients have success, like, we grow with them, right?
Right.
We're not a fractional firm, so we plan to be with clients for a long time. So,
Right.
we always like to see our clients win, and in turn, that does frankly benefit the brokerage too. And then what success would really look like outside of current clients having success is, we're working on really complex deals right now, well
Yeah.
beyond fintech, where we've taken insurance and created contractual liability products,
Wow.
and
Okay.
really teams around those with like where they can sell warranties, for example. We've
Right.
created captives for a few companies in the last couple months, and it's really been a lot of fun working with a growing number of these really complex accounts.
Right.
So just continuing kind of on the trajectory we're on, we're not looking to be, we don't want 5,000 clients, right?
Right.
It-
I see.
Yeah, we're not a venture backed company. We're a service oriented company, and we're just looking to grow at a pace that it doesn't break. And
Right.
I've personally seen companies grow at a pace where you layer in so many things and so many processes that it just doesn't feel authentic anymore.
So
And so, yeah, I think we're on a good path. I'm
that's
just,
good.
if we continue growing the way we are, I'll say it was a successful year.
Wow, that's cool. So if you could solve one bottleneck in the business this year, let's say there's one thing you feel like we need to solve, what would it be?
Um,
Maybe just one or two or something that comes to mind, like some bottleneck you feel like you need to take care of.
yeah, I mean, it's a tough question for me because I did build some AI, and the
Mhm.
linear nature of the insurance brokerage process,
Right.
if is it's kind of long on both ends with the broker in the middle. And if we could find a system where a lot of it was automated and not fractionalized through 30 different AI companies. My point in this is a cohesive system where you could really create the insurance model versus having one system for certificates of insurance, having one system for sales marketing. Sales is a bad example, but one system for invoicing, one system for email, one for saving documents in the Dropbox. What you end up with is 15 systems,
15 systems. So
right?
there's
And
no
they don't
integration. They don't talk
integration.
to each other.
Yeah. And so you end up logging in 15 times and the efficiency really gets lost, I think.
Right.
So if we could get, if the industry can get to a point of integration, as you said, without becoming as complicated as like a Salesforce, I think there's a lot of value add. And I think that there's a lot of independent brokers that could really function on their own, experienced brokers that could really, and I get calls from brokers a lot, like, how did you go out on your own and do this? And it's like,
Yeah.
it
Yeah.
wasn't
Right.
easy. I won't say it just happened. Yeah,
Mhm.
it's an integrated system that I could use or that a lot of brokers with experience could use and still be client focused, client facing with tech to make it more effective and more efficient, I think would be huge.
Wow, that's good. So how about risk management says it's a image not just for back office automation, but for real client impact, right? What
hmm
does client impact AI mean to you? Like when you say,
Yeah, I hate to do this, but it depends. It's a very
okay,
solid question.
yeah,
It's a very good question. It depends on what the client wants. And like,
right,
I think that that's part of the dynamic nature of being a broker is like everybody doesn't want the same thing from their broker.
exactly.
Right? And so having something that's flexible is very important. But, some clients just want insurance done. And then you know what you
Right.
do? You do the exact same amount of work. You
Yes.
just do it behind the scenes. You still review the policy language. You still make sure that
Right.
you're the coverage. They just don't want to hear about it every day. And then
Yeah.
there's other clients that really want to get outside counsel involved, want to go through and redline everything,
Hmm.
which you do no matter what. But that is more about like how you present it to the client. And so again, like kind of understanding your client profile is important in that situation.
Right. So, given your experience in the space, where do you think AI can help corporate insurance most? Is it risk analysis? Is it policy review? Is it client education? Maybe underwriting preparations or claim strategy, portfolio insight, or maybe
Yeah,
decision support? Where do you think like this is going to get to? Like,
I think yeah, another good question. There are policy review tools there that are specific to insurance. There's also, Chat GPT that
right?
does a lot of
Yeah.
stuff.
Yeah.
But but of course using Chat GPT is imperfect for a number of reasons that you're much more the expert on than I am.
Right.
But I think that there is a piece that is missing, and part of the AI that I worked on for a while was trying to address is there's a gap in knowledge between people like myself that have been doing this for 20 years and people with like 3 to 5 years experience or even zero experience. And that transfer of knowledge is has traditionally been through sort of a pyramid shaped growth within large or medium sized firms where you're junior, you learn certain basic things, and as you grow through your career, just like I did. There's I think a really big potential benefit for AI to allow senior brokers to focus on the senior broker stuff they need to do
Exactly.
while still giving more junior or less experienced brokers the capabilities to not just ask a question to a GPT
Right.
and get an answer, but to learn.
To learn.
If you can't explain something to a client better, if you can't explain something to a client in a technical way, plain English way, in
Right.
however they need to hear it, you probably won't be as successful as if you could. And so, like, I am worried that people are just going to take answers from ChatGPT. I'm using ChatGPT as an example,
Right.
but just take answers and then send them. First of all, they're wrong a lot.
They're
And
wrong.
second
Yeah.
of all, are you learning? And so I
Mhm.
think that there's a real world where AI can not only give answers, but can explain why.
And
And when you
explain why.
understand why, you have a very long and prosperous career ahead of you, I would say, as a broker.
Right. Wow. Okay. If you could remove or improve one repetitive or low leverage task from your team, like what you sound like, the senior brokers should focus on senior stuff, right? They shouldn't be in mundane tasks, which I've heard from many corporate insurance agencies or brokers. They don't want to be involved in mundane tasks, filling forms and putting addresses on forms or low leverage tasks from your teams. So if you could remove something from your team, like your team's weekly workload, what would it be?
Well, there's a whole suite of things that kind of fall under the bucket you just described, and I would say
Right.
all of things. So, and there are single source solutions for things like invoicing, certificates of insurance, SLA2 forms. So if you're using surplus lines, there's signatures, there's applications, there's redundancies in applications. I still get PDFs that are not fillable all the time to send to a
I see.
client, right? And then you got to get them back, and then you have to send them back for them to sign. So there's a lot of pieces that are important, but individually insignificant in your broker's sort of world of what they want to work on. So if you could sort of get those processes automated again, sort of from basically when you have your first phone call with a client, let's say, that's where like a senior broker is really important, right? To talk to
Yep.
a client to again sort of instill trust in a way and build
Mhm.
confidence and then see if they can add value. Policy reviews, I think AI is very helpful, kind of going down the linear nature of insurance. Policy reviews to find out if there's problems. There's tools that can help. And then the question is, do you understand? Which is sort of
Yeah.
the tool we were just talking about.
Mhm.
And then you've got to get applications, and those are usually blank, even though the client's information is 98% the same, right?
Right.
And then sending those to the right insurance market, whether through a wholesaler or directly, and then managing all the responses, especially if you're going direct to insurance carriers. If you go to 15 insurance carriers, you have to manage 15 responses. And then going back with negotiations on each one and so on. So like, and then you bind it and then you invoice it and you send final policy. So like a lot of that is more process oriented. And I think that's where the process can be much more automated with AI if sort of the interconnectivity of the process is understood.
That's good. So how does that task show up on a day-to-day basis? How those mundane tasks, how do they show up, and how much time does it take away from your high value advisory work?
Yeah, I
Get
mean, it's completely sporadic, right? It's
right.
like I was working with a client until yesterday, and they're like,
Mhm.
we're gonna bind coverage on June 1st, and then it's May 15th, and then they called me yesterday. They're like, we need a binder today, and so like you kind of find out as you kind of have to just be flexible and roll with the
Right.
punches a little bit, and so there's no set. Some clients are very set in their ways of they follow a process, and others are just like, I need this done now or I need it later, and you just
Right.
kind of have to be there for them. But again, like the tech certainly helps.
Sounds good. Sounds good. Well, for a founder, executive, or investor operator listening today, what first step should they take to better understand their corporate risk? Any
Yeah.
idea?
Yeah. I mean, they all have sort of different, not all different goals, but an investor wants to protect their investment. A founder wants to protect their company and their personal assets. I would say real advice, whether it's me or another person, get a second. If you're not 100% confident in what's going on and you're just buying because it's convenient, get a second broker's advice. Just say, hey, here's some policy. They'll love to do it. They'll love to take a shot at your coverage and see if they can improve it. Typically, just to be completely honest, brokers can get a little bit complacent with renewals over the years. Pricing gets out of whack. Terms aren't relevant as relevant as they used to be. So I think getting a second opinion is just worth doing. And it probably as simple as an email, just saying, hey, we want a second opinion just to see if we're buying the right products. And I told clients plenty of times, everything you have is good. So unless it's a servicing issue, there's no point in moving it. Um,
So
that's what I would advise. Yeah.
cool. So I know, let's talk about URM. I mean, upward risk management. What type of client is great for URM? Like,
Yeah, I mean,
which you
my
typically
my
serve?
yeah, thanks for asking that. I mean, I like working with clients that care about
Right,
the insurance at some level. We also work with clients that just want to get things done. And
right,
I mean, honestly, we're looking for long-term relationships. So
right,
if we're getting someone who just says, I want insurance and we don't care, sure, we can do it. But like the ideal client is someone who either wants to fix what may be broken or to have sort of a relationship partnership with their
right.
broker. It doesn't mean we're talking once a week or anything like that. Yeah, growth clients, clients that are interested more in their risk, because if they're interested in risk, that means that they probably have a view of a long-term view of their.
So, where can people learn more about you and connect with URM? Any idea, maybe phone numbers, site, maybe you want to read out your
Yeah,
website for,
probably the easiest way is upwardriskmanagement.com. We
right,
have ways to reach me directly. We have lots of materials. We focus on anything really complex, from captives, mergers and acquisitions, you know, tech and fintech, AI companies, as we've kind of gone over. We've seen it, and we're happy to take a look at to answer some questions as a starting point to connect on a call and see if there's a place where we can add value or steer you in the right direction. So again, it's upwardriskmanagement.com or upwardrm.com. Either one get you to the same place, and from there
okay.
you can see some of our materials. You can reach out to us, and my email is steve@upwardriskmanagement.com.
Oh, sounds good. Hey, Steve, thank you for joining me on this Smart Office podcast. I really appreciate your insight on corporate insurance, AI risk, insurtech. I mean, those are new things to me. I'm thinking about AI risk right now and the importance of building risk programs that stand up when they are actually tested, right? You sound like coming from that legal perspective and the risk perspective and then insurance, everything mixed together, which is something uh, business should be looking at. I really appreciate your insight and your time. It's really been a pleasure having you on the show. Thank you very much.
Yeah, thanks for having me.